Hello everybody, this is Lara from Pure Elliott Wave with an update of Elliott Wave and some technical analysis for XRPUSD currency pair for you today. I'm just going to give Jack a break this week. I'm also going to change the wave count slightly for the short term for recent movement. Let's step back and look at the entire price history of XRP from its inception back down here in 2014, from this low to this high. I'm starting my wave count here in July 2014. This is the first major low within XRP's price history, and from this low to this high we have what looks like a really nice looking 5-wave structure. 1, 2, 3, 4, 5 steps forward, zigzag for 2, triangle for 4, nice alternation there. That's not quite right, there we go. Within 3, I'll put these labels in actually, let's see if it's too squished up. So we've got 1, we've probably got 2 here, probably got 3 and 4 in here, and you probably have to look at that at lower time frames. This is a really common feature of cryptocurrencies, including XRP: brief shallow fourth waves compared to deep time-consuming second waves. That happens because the strongest part of a big third wave impulse here at higher degree, primary degree, is the fifth wave. It's the fifth wave that moves the greatest distance in the shortest amount of time. This has the strongest momentum. It exerts a very strong upward pull on the fourth wave that comes just before, forcing it to be more brief and shallow. It's not technically exponential growth, but it looks like similar to exponential growth, and sometimes it can have a curved growth pattern that looks like an exponential growth curve. It has a slow start, acceleration through the middle, and an explosion at the end for its big third wave. So I have no problem with the disproportion here between intermediate 4 and intermediate 2. So we have 5 steps forward, labelled cycle wave 1. It lasted 42 months. That's about right for a cycle degree wave. Previous all-time high at 3.32, followed by a deep double zigzag. This is a 96% correction. It doesn't look that deep because this is a semi-log scale, so it's because if you view, you just cannot view these charts on anything but a semi-log scale. If you view it on an arithmetic scale, you can't see what's happening at the beginning here. It just looks like a flat line. You cannot view any of these cryptocurrency charts for any time frame, apart from hourly, on anything but a semi-log scale. 5 steps forward, 3 steps back, a 96% correction, a 96% reduction in market value, a huge deep double zigzag lasting 26 months. So 42 months, 26 months, nice proportion there. Neither of them exhibiting a Fibonacci number in terms of how many months they lasted. Primary 1 lasted 12 months, one short of a Fibonacci 13. Primary 2, another deep correction. It's a 0.965 depth of primary wave 1, so very deep second wave corrections, lasted 18 months, 2 short of a Fibonacci 21. Intermediate 1 lasted a Fibonacci 8 months, intermediate 2, 12 months, 1 short of a Fibonacci 13. And now intermediate 3 underway. I've removed the target for intermediate 3 because I'm going to give you a lower degree target today. We'll see that at the daily time frame. But I'll leave the target here for primary 3 at 27.44. It would reach 14.72 times the length of primary wave 1. That's the ratio exhibited between this third and first wave. That's where I got that ratio from. It's not a Fibonacci ratio. I'm going to estimate primary 3 may end about September this year if it lasts Fibonacci 34 months, but that estimate is a bit of a stab in the dark really. These waves for XRP don't often exhibit durations in the Fibonacci number sequence, but I think it's worth having a go. I know Jack doesn't like to because, well, mostly because people keep arguing about it or complaining about it. Well, I'm going to do it because I don't mind if you complain or argue with me, that's fine. I'm going to do it because it might end about September 2025. Now this is how I use these estimates of time. When we get towards September this year, I'll be looking to see could this structure be complete around about that time, give or take 1 or 2 months either side of that date. So we've got 1 month short of a Fibonacci 13, 2 short of a Fibonacci 21. So give or take 1 or 2 months either side of that date. So we'll be looking at a 4-month envelope. In that 4-month period, I'll be looking carefully to see if primary 3 could be complete. whether or not it reaches the target. If we can see a complete structure, then it may exhibit a Fibonacci 34 months duration. When primary 4 arrives, it may not move into wave 1 price territory, but for the shorter term, when intermediate 4 arrives, it may not move into wave 1 price territory below 0.9301. I'm drawing this base channel around primary 1 and 2 from the start of 1 to the end of 2 with a copy at the end of 1. Actually, I'm going to pull it down and sit on the low of intermediate 2. If we do that and sit it on primary 2, it's got some overshoots down here, that's okay, but let's use the upper edge. This is how you use a base channel. Lower degree correction should find support or resistance on the side opposite to the trend, and the power of a third wave should be able to break through a base channel in the trend direction. This trend obviously is up. Let's take a look at the weekly time frame now. We're going to go from the low of intermediate 2, I think. Oh no, we're going to go from the start of primary 3. So we've got a leading expanding diagonal for intermediate 1. Triple zigzag for intermediate 2 does fit. It's not a common structure, but it does have a pretty good fit. This is my change to the wave count now from this low to this high. I'm going to label this -1 with an intermediate 3 and -2 complete here. Because of the duration, this lasted 12 weeks, one short of a Fibonacci 13, and -1 here lasted 23 weeks, two longer than a Fibonacci 21. This movement here has breached a channel that contains this upward movement, so we should label this wave up and this wave down at the same degree. Now the only question I have today is wave 2 complete here. If it's complete, it's a double zigzag. Now it could continue further as a triple. We did see a triple zigzag here. It could happen again for wave 2. If it does continue further, it may not move beyond the start of 1 below 0.6444. So that is risk at the weekly time frame for a longer term outlook for XRP. Here's my new target, and it works with intermediate 3, -3. If it reaches 6.854, that's a fairly high Fibonacci number, but if it reaches that Fibonacci ratio to -1, it would reach up to 22.29. This suggests that the target for primary 3 may not be high enough. If this is about where -3 ends, then we're going to have to calculate higher targets eventually for primary 3, and I'll do that when intermediate 3 and 4 are complete, and I have the starting price point for intermediate 5, and I can calculate targets for primary 3 at both primary and intermediate degree. I'm considering what if primary 3 ended in August this year, if it lasted a Fibonacci 144 weeks. That would be quite close to September this year, so the estimate on the monthly time frame and this estimate on the weekly time frame a little bit starting to zoom in on a hopefully more accurate date. So give or take 1 or 2, maybe 3 weeks either side. So now instead of a 4-month window, we're going to have a 6-week window around August 5th this year. About that date, we'll be looking to see, could primary 3 be complete? Let's take a look at the daily time frame. We're going to zoom in on the structure of -2, the high of -1 here. This point here, -2 subdivides quite nicely as a double zigzag, W, X, Y. W is a zigzag, A, running contracting triangle for B, quite a long C wave, very bullish long lower wick. Minor wave X, a zigzag, A, expanded flat for minuet B, and a sharp C wave, move beyond the end of A. From this high to this low, this movement subdivides okay as a zigzag, 5, 3, 5, leading contracting diagonal for A, impulse of C, nice alternation between the two. If -2 is complete there, then -3 should have begun. I should put my target on there, shouldn't I? There we are, the target for -3, 22.29, the same as I have at the weekly time frame. Draw a channel around -2 from its start to the end of minute X here with a parallel copy at the end of minute wave W. Price has been unable so far to break through the upper edge of the channel. I define a channel breach as a full candlestick with a colour opposite to the direction that contains the channel. So the direction that is within the channel is down, so we want a full green candlestick outside and not touching the channel, so above and not touching this trend line. If we can get a full green daily candlestick above and not touching this trend line, that would meet my conservative definition of a channel breach, and then I'd have a little bit of confidence that my -2 could very well indeed be over. If it is over, and minute wave 2 is also over here as a zigzag, if it continues any further as a double zigzag, it can't move beyond the start of 1 below 1.6120. So this wave count is now very, very bullish indeed. It expects a third wave at minute minor, intermediate, primary and cycle degree. Minute, minor, intermediate, primary and cycle, that's 5 degrees, including really big degrees. There should now be a really strong upward pull exerted on XRP. I'm expecting we're going to see it go vertical again at some stage this year. But here's the problem. These cryptocurrencies will start out slow. Let's take a look at what I mean. They start out slow, they accelerate through the middle, and they explode at the end. XRP explodes at the middle as well, actually. Starts out slow, huge acceleration, a little bit of a rest, consolidation before the next huge upward movement. Consolidation before the last upward movement here. So starting out slow, accelerating and exploding at the end. So I'm going to expect a similar look, particularly huge vertical upward movements toward the middle and the ends of minor 3, intermediate 3 and primary 3. That's typical behaviour for this market. Let's look at some technicals just on the daily real quick. At the daily time frame, we've got a death cross here as the purple 50-day moving average crosses below the 200-day green moving average. This is a bearish signal, but you've got to be really careful. It sounds really scary, but give this the least weight in your technical analysis because these are such lagging indicators, a 50-day moving average and a 200-day moving average. If we get a relatively short-lived bearish movement, these signals are going to come after the movement's complete. That's how it works because they are based on averages of past data, so they are lagging. So this death cross may just be telling us that yes, this was a downward movement. And it finished with a strong bullish engulfing candlestick pattern. We've got some upward movement here. We've got another pullback. We have another bullish reversal pattern, not so strong this time though. A piercing pattern is not as strong as a bullish engulfing candlestick pattern, and it doesn't have good support from volume. The bullish engulfing candlestick pattern did have a bit of support from volume. Resistance is still holding at 2.7, support is still holding at 1.9. Volume up toward the last high did start to increase with volume pushing price higher. Overall now, as price fell, volume was overall declining, so there's not a lot of strength in that downward movement. I expect it's a counter trend movement and not the start of a new bear market. This supports the Elliott Wave count a little bit. On balance, volume has given us a weak bullish signal with a break above resistance. It's got 3 or 4 tests. If you count these both as tests, then this yellow resistance line is broken. This supports the Elliott Wave count. ADX is declining, previously telling us there was a downward trend. Now it tells us there's no trend at this daily time frame. RSI is neutral, as is money flow. Neither exhibit bullish divergence at the last low. And ATR has been declining as price is falling. A lack of volume and volatility in that downward movement tells us it's most likely a counter trend movement. Given the model of stochastics plus support and resistance, because ADX says there's no clear trend, that tells us to expect an upward swing to continue until price reaches resistance, perhaps about 2.7, and stochastics reaches into overbought simultaneously with price. Stochastics may not properly enter overbought. It didn't properly here, or here, or here. It fell short, or here. So as soon as it gets entering overbought, starts to enter overbought, we'll look for potentially the end of that upward swing and the start of a smaller pullback, because price doesn't always move in a straight line. There will be pullbacks and consolidations along the way. That's absolutely normal to be expected behaviour. And that's it from me today with a quick update for XRP for you. I don't know, how quick was that? Oh, under 20 minutes. For me, that's pretty good. I'm in Germany. I'm in Frankfurt for a couple of months, so hopefully I'll be able to get some more work done because I'm going to be settled in one place for a couple of months. So I'll be able to hopefully get some more analysis of other coins done. It's time that I started to work through analysis of all those coins that I own as well. So that may be coming also. So please stay subscribed to this channel because you don't want to miss that. And it's all free, so yay. Thank you very much for your support, and if you haven't already, hit the subscribe button and the like button and leave a comment because all of your engagement helps this little YouTube channel grow.